It has been fat minute, a fat minute since I've made a video, and a lot has happened since then. Um, Actually, quite a decent amount of stuff has happened. Like, I'm getting married in 6 weeks. Yeah, which is insane because the last time I made a video, I wasn't even engaged or anything, so I was still dating then. But I wanted to make a video whenever I got funded, right? Like a kind of like a progress video type of thing, just explaining my journey to this point. But I still haven't gotten funded. It's been quite a journey, and I haven't blown any accounts. I'm up on my accounts, and I've completely redone my trading strategy slash style again. So I started kind of slacking towards the end of the year. The end of my year kind of got chaotic, and I didn't really trade much. But over the last month or two, I would say since February, I've gotten a lot more consistent. So I just wanted to make an update video and kind of go over the 3 trades I took this week, explain them, explain my thinking behind them, strategy updated, kind of fill you guys in on what's been going on with my trading. So if we just go onto my computer here, or what's pulled up in front of you guys, I have my trading log, essentially starting from where it says combine, which is trade number 13, all the way to 39, so the last 27 trades. Basically, this has all been combine. As we can see, November took 1 trade, no trades December, 3 trades January, then February, March is where we started picking up. As we can see, there's wins, losses, like an equal balance. If I go on my chart right here, 40 total, we have about 47% win rate, but this is, keep in mind, including these paper trades right here, which alters, kind of skews my trading performance. But I have finally kind of found my edge. Fix my hair. My trading style that I like, which is funny because it literally goes back to the way I was trading probably 2-3 years ago. I just kind of went back and I updated some stuff, and I found that it works for me. And I just spent a lot of time. I've spent probably 100 hours, good 100+ hours back testing, sitting at my computer reviewing old, like since 2020. I would start from 2020, go all the way to 2024, testing the strategy, finding my entry model, and I think I finally found what works for me. So right now, if my account balance is at, if I pull it up real quick right here, it's active on here. My account balance is sitting at $51,385 as of today. So this week I took 3 trades total. We had 2 winners, 1 loser, kind of a smaller loser, but that's all right. That's part of the process. It was a really good loss, actually. And I'll pull it up right here. I actually got the live trade. Sadly, the 2 winning trades I was not able to screen record, but because I was at the gym when I took them, but I did manage to get this one, so I'll review the footage. As you guys can see, this is kind of the same setup. If I go into replay mode and I go right here, I'm gonna break down this first trade for you guys and my thinking behind it. So entry was on, are you gonna work? Maybe not. Okay, I guess it's not gonna work. But essentially, my thinking here is, okay, so my trading view is not working. That's fine. My thinking here is we see a rejection of the zone. I'll explain to you guys a little bit about my strategy in a second, so it makes more sense. But first, I kind of want to break down this first trade and show you guys my thinking behind it and the thinking behind the loss. I started recording as soon as I entered, right? I have everything set up, moving my limits and whatnot. The reason why, the reason why I took this trade, let's see, what am I, that's fine. The reason I took this trade because we have this pretty strong close below, but keep in mind of this consolidation here, which is marked out on TradingView, which up. This time. So if I pull it up, replay mode again, maybe. So entry, close above. Keep in mind these consolidation levels right here. We have heavy consolidation right here, like a little bit of consolidation right here. We have wicks, but we get this strong close above. So I figured, hey, let's give it a shot. Immediately, price doesn't continue the push. Price automatically has the retracement, which for me is not what I want to see. I want to see a strong push. And if we look right here, actually I have it pulled up. We see on the line, have kind of like this push rejection of the orb high. And then we have a push above and close above, which is what I want to see. This line diagram is just kind of so it's easier to visualize for you guys. Because looking at this, I understand what's going on. Some people might not. Looking at these lines, right? We have this rejection off this one, came back down. Price, buyer stepped in and pushed through the high. So I entered on the high. Immediately we start consolidating, kind of going sideways, which means that there are sellers at this level. That's not what I want to see. I don't want to see sellers there. I want to see buyers push through. I want to see buyers gain control. I want to see strength in my buyers, but this shows that there are sellers present. We see that this candle closes as like an indecision / doji, but the next one closes as another close above. So I'm interested in this trade, but we have another indecision candle form. So now I'm understanding that sellers are here. I don't want to be in this trade anymore. Even though it's only been 3-4 minutes, I already know that the chances of this trade going in my favor are now much lower. So I wait to see what price does. Price, we see consolidation. There is no buyer strength anymore. Sellers are trying to gain control, which we can see by these bottom wicks. And if we look on the line chart on the right side, we can see that it's kind of consolidating in one spot. We want to see kind of a strong move like this right here. This move right here, which on the line chart we can see is pretty aggressive. So we get this candle right here. Now my thought process is, okay, we see dojis, we see a little bit of buyer strength. I don't want to be on the downside of this trade. So I move my stop loss. I trail my stop loss to below this structure right here, which if you look on here is kind of at this structure on the line map. And we see that price tries to push and sellers really gain control now. Okay, now I understand that sellers are present. I no longer have the move or see the move I originally wanted. And we can see here, we have this initial kind of top wick candle, which confirms that the roles kind of have been reversed. Sellers now have strength and we get stopped out here. Right here, we get stopped out to a wick, and as we can tell, my bias was correct. I'm not afraid to flip bias. As we can see, we have a heavy sell-off. Price tried to break one more time and we didn't get that. And that's the first trade I took this week, which is a loss. But it's a loss that I understand is part of the game, and a loss I'm completely okay with taking. And I understand that according to my plan, I trailed my stop loss correctly. I did everything correct. So that's kind of an example of this first trade. Now, before we move on to the second trade, I want to explain my strategy a little bit, which if I pull up right here is kind of what I look for. So I trade the opening range break, right? The 15-minute opening range. Okay, I need to slow down on the thinking a little bit. But the idea behind the 15-minute opening range is that the first 15 minutes, first 30 minutes even, are the most volatile part of the market, right? That's where market opens, sellers try to step in, buyers try to step in, overnight price action, all these things, and we form a low and a high. And typically when we break to one direction, especially on higher time frames like a 30-minute or 1 hour, when we break to one side, price, we could see a strong push in that direction, and I want to capitalize off a small chunk of that strong. I don't want the full move. So that is, in a sense, what I look for, and that's what we got right here. But it goes deeper than that. It goes deeper than just a close above or close below. I have my entry model that I look for, and this is a very sloppy example of it. But if I pull up some other trades and stuff, it might make a little bit more sense. Let's take a look at this one, for example. What I look for is, if we see right here, we created the high and the low. I look for a rejection off one side. So comparing it to this trade, we got our rejection right here. Let's go back to our line map so it makes more sense. I can explain it to you with this. This is not an A tier setup, but it's still a decent setup. It's just a little bit of riskier one, which I understood. We have this rejection off one of the sides. So already I have one step, you could say checked off. We have the rejection or the retracement off one of the zones, which shows that sellers are there. We have presence. Next, I want to see continuation, right? I want to see a continuation of the buyers. So that's what we see right here. By this strong move on the line map, we see a continuation of the buyers, and I want to see the buyers close above the sellers, basically wiping out their orders, which we see here. And if we look on this trade, that's exactly what we see here, but to the sellers. We zoom in. This is about as much as I can zoom in, so bear with me. You can see where my entry is, even though I'm slightly to the left. We can't, or right here, we had that. To the flip side, we had sellers close below the buyers, so sellers gain control. We have this kind of step created and then push down. It'll make more sense when I go to today's trade, break it down. But that's essentially what I am looking for. Same story right here, right? Same exact idea. We have this rejection and then a retracement close below and then push, price pushes down. That's all I'm looking for. That's all I want in these setups. And this is another messier one. We see the wicks, but stop loss above the wicks. We had the rejection, then the retracement close below, and then a push, solid push. And it just keeps going, right? Same setup here. We have a retracement or rejection, then a retracement, and then close below. This was we can see a more choppy market, which is similar to the trade I took today, except this one didn't play out. This one played out on my screen. The one this week didn't play out. Usually this happens when we're anticipating news or on higher time frames, such as the 1 hour, 4 hour daily. We have consolidation or we're stuck between two zones or two areas. So with that being said, that was the first trade I took this week. Now we go on to the second, the first winner, which we see right here on my trading log. April 16th, that was yesterday. We took a opening range break low breakout short. We were in it for a total of 9 minutes. Today's trade we were for 6 minutes. So this is quick stuff, guys. This is like I'm managing my risk as I go. So if we go to our chart views to yesterday, this was the price act. If I pull my, actually I don't have to. So let's go into before my entry. We see the same exact thing, right? We created our high. We have a rejection forming, correct? If we look on the line chart, if it'll cooperate with me, we have a rejection. We have the rejection form on the line chart. Okay, I'm interested. Price is looking pretty good. Then we have our retracement now, or it doesn't matter. Essentially what we're looking for is we want to reject off the zone and then continue this move. And our added confluence is the fact that we have all these wicks. Price is rejecting off these wicks. And then we get the close below right here, which is where I enter, and we can see on the this is a beautiful setup. Although on the candles it is pretty choppy, it is a really nice setup on the line chart, where you can see right here. I usually don't pay attention to the line chart too much. I just keep it there as like, but for me, I just focus on pure price action, and we can see price immediately continues to dump. Correct? We have the solid push, a strong push. We can see buyers are a little bit active because of these wicks. We get a retracement right here, I believe. And then sellers really step in again at that low, at which point I trace my stop loss because we have market structure created. I like to trace my stop losses above market structure because I know if that buyers step in and push above this zone, we are likely to get a reversal. So my take profit was above overnight area of interest, which we had these lows created overnight, which is what I was looking for. And as we can see, I kind of essentially caught the bottom portion of that move. And as I said, this is what I'm looking for. If I had held my trade, I would have eventually gotten stopped out over here above this zone. But I believe yesterday we had a really strong dump eventually in the day we did, but we had a retracement first. So that was yesterday's trade. Very clean trade. Again, with my take profits, I'm targeting like areas of interest at a minimum of 1-to-1 risk to reward ratio, even though I do trail my stop loss, so it creates a dynamic kind of risk, but I'm targeting areas of interest. Now, if we go to today's trade, also choppier price action. I just removed this. I can explain this trade a little bit better, and I'm actually going to go back a little bit further so that I can break down the trade before I took it. So This is price action at 946, or right here. We have created the highs and the lows. If we continue right here, I was looking for a setup at this bar. I wanted to see some sort of rejection off this zone to kind of create what I'm looking for, right? As I explained earlier, but we kind of chopped. Price closed above. I debated entering here, but I was not interested so much in the price action because we don't have as much upside as we do downside, especially considering on higher time frame kind of downwards. Not that it matters to me. I don't carry a bias. My biases switch very quickly. Price action, because here I was looking for buys, and then we see consolidation. I'm no longer interested in it, and we see that we push. We kind of have this consolidation. Price manager goes below, and then we have one more attempt of buyers trying to break above, but sellers ultimately step in. And then this is what I'm looking for: a rejection of the zone, and then a retracement as sellers step in and confirm my bias, which is where I enter. And this is the trade today. Keep in mind, we have two areas of interest from overnight. We have this overnight low, yesterday's session kind of lower low, and then another area of interest over here. So my take profit was above this AOI, or area of interest. We get the entry. If we look on the line chart, we have the rejection, check, the retracement, check, and then the close below entry, check. I have all my confluences I needed to enter my trade. Do I have a place to put my stop loss? Yes, above the structure. Do I have take profits? Yes, this area of interest, and it's above a 1 to risk to reward ratio. Although it doesn't matter so much because I have a dynamic risk system. So my RRs kind of change around, because realistically, if I continue this trade, my risk to reward ratio was more like a 1 to 2 almost, right? Instead of 1 to 1. But I don't know if price is gonna hit full stop loss, full profit. I just know I'm in here and I have clear targets. Whatever happens, happens essentially. And at first, sellers don't have full control. We can see buyers kind of step in, they want to push up, but then we have a strong sell right here, which at this point I knew that sellers had stepped in. If price gets above this zone, I'm no longer interested because we're likely to have a reversal now. So I trail my stop loss to break even, not break even, to above structure, this previous lower high. I'm gonna mark it out, actually make it a little bit easier for you guys to understand my thought process. So lower dash high. These yellow lines are my trailed stop loss. Trailed stop loss. So now I've trailed my stop loss. I've lowered my risk from $280, which is roughly how much I'm comfortable risking, about 0.5% to a full percent, depending on the setup. I would have risked a full percent if price was cleaner. So now my risk has been lowered from 280 to roughly, I want to say 180 to 200, much lower, much better. And as we can tell, price action, although buyers are still present, ultimately we end up hitting full take profit right here with this strong push. Then price ends up rejecting a little bit, and we have a reversal from there off higher time. But if we see here, looking at the line chart, it kind of makes a little bit more sense. I want to see this retracement or rejection, and then a retracement, sort of a rejection slash retracement. And then sellers continue their push and close below, which if you look on the left side of the screen right here where this cross is, we have this kind of close below right at this line. We have a slight retracement and then just a straight dump, which is beautiful price action. Although it is kind of a little bit later in the day that I took the trade. Normally I want in a trade before 10 o'clock, but this was 10:24, although my trading time is right around till 10:30, from 9:45 to 10:30. I don't trade the first 15 minutes. So it really is as simple as that, guys. Slow and steady really does win the race, and this is something I wish I knew much earlier in my trading career, because when I first started trading prop firms over a year ago now, actually almost 2 years, I was trying to hit 100K accounts, 158K accounts, and I was risking like $1,000, this kind of stuff, and I blew a bunch of accounts. This is, I calculated with my closed accounts, this is my eighth combine that I've been trying to pass, and this is the closest I've been. You know, God willing, it'll work out, it'll play out, but I've held it for December, January, February, March, April, 5 months. Held this account for 5 months. I have not lost it, which is a very good sign. And I've been just managing my risk. And we are right at halfways to getting funded. I just need to hit $1,000 essentially, which, we'll see how it goes. I'm just focused on getting the good setups. I'm not worried about making money, losing money. I just want good setups. I know my risk to rewards, all this kind of stuff. I know what I'm looking for an entry. And then from there, I just manage my risk dynamic. So that's kind of been where I'm at these last couple months. I've been off YouTube, off gym stuff. I'll make a separate episode for gym stuff. That's its own thing. I just wanted to make trading as I continue to progress my trading career. And I've said it a couple of times and I keep saying it, but I really do want to create more trading videos just to show you guys my journey. I mean, I started day trading. My dad introduced me to it, and I want to say 2018, I've lost count. I was 15 years old, I want to say. Yeah, I was 15 years old because it was before COVID when I first started messing around with it. I remember going to my uncle's in Oregon and just trading like fake accounts there because he was telling me about like investing more, but I was more focused on, and I never really took it super seriously until about 2 years ago. I have in my journal, although my journal lately, but if I keep scrolling, I have like all the way from 2023. This is October, September, May 2023 was when I first like logging my trades. So it's been 2 years of consistent trading, and I'm finally 2 years later of almost daily journaling. Every single day, not every day, but almost every single day, I was consistently journaling, charting, all this stuff, and all this work is finally starting to show. We'll see what happens from here. Thank God I have a job, I have work, I have a career outside of trading, but it is still my ultimate dream to have that finance of day trading. And whether it's $200, $300 a day, $500 a week, it all starts to stack up. Because if you think about it, on today's trade, I made $239. Okay, $240. I get a second funded, $480. I get a third funded. I'm at, $700, $800 almost a day on 3 funded. And this is with lower risk. I could scale my risk up a lot more, but I'm just comfortable around the $300 range. Is really comfortable. If I take a loss, it doesn't affect me mentally. It doesn't, change my mood for the day. Now imagine if I'm $1,000 per trade, or even $500 per trade, 50K. I'm only 3 or 4 trades away from blowing it. Like this, my lower risk, I can lose 5 trades. Actually, even more because my drawdown is lower, but I could lose 5 trades in a row and I wouldn't blow the account, right? So with that being said, that's kind of where my thinking is. And as I was saying earlier, slow and steady really does win the race. And it's something that I would focus on, being more calculated with your trades, being more calculated with the risks, instead of thinking about, oh, I'm losing money, all this, I'm giving money for this trade opportunity, right? How much money do I want to give for this? How much money do I want to put up? If I'm wrong, how much would I on this setup, right? When you start thinking about it differently, it changes everything. And that's one thing I've been doing with my mentality is, instead of, oh, it's win, loss, all this stuff, or I'm buying, I'm selling, all this stuff. I like to think, for this opportunity, how much would I want to risk? Is it worth me risking $1,000? Is it worth me risking $500 based off statistics, based off of my trading? How much is this setup worth? Is it worth $150 of risk? Is it worth $300 of risk? How much do I want to give to the market for? If I'm right, my profit potential is whatever. Profit could be $250 on a $250 risk. It could be $500 on a $250 risk. That is outside of my control. I only control how much I lose. And that is something that's hard to learn mentally for so many beginners, is being okay with losing and knowing how much to lose. And whether you have a static risk to reward or a dynamic risk to reward, that's to everybody's personal preference. I prefer dynamic risk. It works better. I prefer trailing. Some people don't trail their stop losses. They have set. For me, what works for me doesn't work for other people. That's something I'm learning in my own trading career, in my own trading style, in my own trading psychology. Is just what works for me, and I'm just trying to tap into that instead of trying to make some. Because I've messed around with ICT, SMC, all this stuff. I've messed around and it doesn't work because I was trying to force it on me, essentially. I was trying to make it work. And then I took a step back, see what I like, see what resonates with my trading style, found something that works, and why not just go all in on it, learn every aspect of something else, right? So that's just where I am with my day trading. You know, hopefully I'll be funded by the end of the year. I've been saying this for 2 years already, or 3 years almost, that hopefully I'll be funded by the end of this year, end of this month. I don't have a time frame. I'm just hoping for the best, but understanding that there's work that needs to be done. I'm okay with that because I've made this much progress. I've worked to this point. I'm okay with another 2, if that's what it takes to that, you know, profitability. So with that being said, guys, I want to be more, maybe like weekly check-ins, bi-weekly check-ins, something, but I do want to keep you guys updated on how my trading is going, and it'll just help me stay a bit more consistent with myself, with YouTube, with all these things. So I appreciate you guys stopping by, you know, tuning in, whatever you want to say. I appreciate you guys checking out. Hopefully you guys learned something, maybe understand trading a little bit more, that it's not all gambling. So with that being said, I will catch you guys in the next one, whenever that is. Take care.